What's up, everybody? Logan here coming at you guys with another video. And today we're going to talk about this very massive $60,000 zero DTE day. You can see down here. Now, granted, I do have other positions that worked out really well, and you can see them down here. I had a couple things I put on earlier this week, kind of predicting or assuming we were going to get this big move just based on support and resistance levels. So we'll talk about that today. I know I've been away for a couple of weeks. I've actually been playing a lot of golf. You can see how sunburned I am after trading all day. And these trades have been a little bit more mentally taxing than I normally take on. So I do want to go over this though, because this is like one of those setups you get 1 to 2 times a year. And there's a few things I was looking for and why I got so aggressive. This also is over a 7-figure portfolio that we're doing these trades on. So if you think you're going to do this with 10 grand or 20 or 30, that's just not the case. I've been trading credit spreads for years and years and years. So I have a really good idea of what I can handle and how much risk I want to take on. But today just happened to work out really well. And this has just made the week so much better as well. So you guys can see the actual orders here replaced at 931. And then this one was 932 for the 55, 25, 55, 35 call spread, right? We did a CCS there. So we got a bunch of credit for taking this on. I really didn't plan to hold this till expiration, and I just wanted to see if I could spend enough time underneath 5,500 to where I could even collect, I don't know, 30 to 40%. But we just kept breaking support, right? And we're in this like knife catch mode is what I like to call it, where every support is just getting blasted through. So if we go over to the charts tab, we are really at the bottom on all my standard deviation charts here. But if we zoom in, and we'll zoom in on the hourly, we were spending a lot of time around the mean. Also, if you guys have yet to leave a like, comment, or subscribe, I'd appreciate that. If you did it right now, it would mean a lot to me. I really do appreciate all the support that you guys take on the channel. We're just around 15,000 subscribers as I'm making this video, so I really appreciate all the support. But overall, right, we had a couple weeks ago, I mean, look at how rampant this has been since early July. The market's just been up and up and up, and we started taking call credit spreads in the Discord up around this time, riding a lot of them through here, waiting for the pop back to resistance and grabbing a few more to scalp. But we're staying right inside the standard deviated channel. And I know a lot of people have probably gotten hurt pretty bad trading this as of recently because their emotions tell them that the market only goes up. But we're just living inside this channel. So I could see us dipping all the way to 53.70. Bottom end of the standard deviation, but if it doesn't, we're coming right back into the point of getting a little bit more bullish again. So I'm keeping that in mind. That's one thing I'm really paying attention to is where we are on the hourly chart. And once I saw a lot of these resistances hold very well yesterday, we didn't get over 55.85. So it made me more confident in today's move, right? Taking that trade, taking that setup, and then riding it out through the day. Now, you don't get these days very much because we also had the VIX, right? Our volatility index is now at the top end of the channel breaking out on the hourly chart. But overall, we've talked about this where 15 on the VIX is one of the biggest momentum shifters in the whole market. Anytime you see it back here reject 15, it will dwindle its way all the way down to 11, and you might see a 200 to 300 point move upwards, and vice versa. We found support, old support around 15, so it made me more confident in that trade today, and that's why this is one of my biggest trades that I've taken all year, was just because of that as well, right? We have the VIX right there at 15, acting as support. Once this candle started breaking out this morning, I felt very confident holding on to it. And then if the VIX was to retest and I placed my level around 15.8, that's when I was going to take that position off and just move on to the next trade. But overall, you have to allow these big winning days to work out, right? If you just get rid of your profit when you're up 10 grand or 5 grand on something like this every single time, you're leaving so much opportunity out on the table, right? And that's one thing that you kind of have to pay attention to if you're looking at this from a psychological aspect. This has been my favorite market to trade by far. This last week and a half, really, where we've had a couple pops to take put credits, but mainly the call credit side has been just such an enormous amount of opportunity You know, we were squeezing into a lot of this because if we zoom in here, let me zoom out a little bit actually. Look at how long we had been squeezing, right? We've actually spent a month and a half squeezing on the VIX. We did that back here in April, and you guys remember what happened then. The market fell 400 points, and we're in the midst of that happening again here. So old resistance from that was around 20. So we have 15, 20, we have 11, right? 11's around that mean area. But if you understand how the VIX moves, it will really help you with options premium as far as what's worth my time, waiting for a big move to happen so you can make money when this happens and not be on the losing side of the trade. I wanted to get a put credit spread earlier. I thought it was good value. I didn't end up taking it. It would have gotten ran over at the end of the day. So I'm glad I didn't take it. We also haven't tested the 89 day since April. So we were a little overdue for that. And this is a very large expansion candle. And once we were not able to eclipse some of these old levels like 5,600, 5,580, and you have those Google earnings, Tesla earnings kind of leading the way for this, you're going to see a massive day. We also haven't had a 2.3% day in forever, but look at where the mean is. Our average is around 5,300. We should always expect the market to find its mean at some point. And that's not something that I have trained myself just to look for specifically because I know things can change, but we have these averages over time frames and it's a very accurate thing. So 5,300, 5,320, that's a super healthy pullback around the 89 to 100 day moving average. And, you know, most stocks are actually trading underneath their 9 and 21 EMA already. So many of them. So we're seeing a little bit of that divergence, which is what we saw when the stock market crashed back at the end of 21 into early 22, right? Where we started to peak a little bit. We kept slowly squeezing higher. And then we saw a lot of this movement downwards after that. And I'm not here to predict that that's going to happen, but I want you guys to be conscious and cautious that that is an option, right? We could fall all the way to 4,700 and it would be just like last November where we found the bottom end of the standard deviated channel on the 2-year 1-day. So you have to mitigate your emotions and just place yourself in the market you're trading because at some point what goes up will come down, and we're seeing the RSI, you know, middle of the month, the highest it's been since December, and even then we had a nice little pull down, right? That was only 150 points, but we're seeing these moves come back into the market. We're seeing fear and sellers come back into the market, which I find a lot of opportunity in, and I don't care if the market goes up or down, right? I've mentioned this so many times before. I just want to make sure that I'm not getting ran over when I'm trading my credit spread. So overall, I liked my risk to reward today. You know, what I should have done was just place that trade 100 points lower, right? Way less risk and it would have worked out. But overall, I liked that opportunity today, and who knew we were just going to keep slicing through support. And now we're in knife catch mode where the next day's candle could be even larger than today's candle was. I do want to take some time to say I am starting a little mentorship group. It goes for 2 months. It's $3,000 to join, but we'll do 2 Zooms a week, and then I do weekly lessons. If you guys do want to join and learn how to trade like how I trade, then the link is below. There's an email you guys can reach out to, and then we do have the Discord if you guys want to come trade with us as well. The link is down in the description. If you use code AMP, you'll get $15 off your first month. So that's always down there if you guys want to come join with us. Everything we've been doing, right? Where the market is now, paying attention to trades that have gone against you maybe, or maybe the last month you were getting ran over every single day on trades, and now you're finally seeing the market move in your favor. Or maybe you're somebody who got sucked in to buying the top, and now you don't know when the pain's going to end. So one other thing that I like to do besides knowing my levels, right? We looked at this as like we're actually in a really decent buying opportunity on the short-term time frames. The long-term ones need a little bit more work. Now, this is something that I haven't shared on the channel before, but if you guys have yet to subscribe, hopefully you do after I talk about this a little bit. But we have a couple things I want to break down on the monthly chart. Now, if we look at back into 2022, here's our mean, right? Right now is 48.50. Back in 2022, when we were tapping close to the yellow line, which is one standard deviation to the upside on my 10-year monthly chart, look at how much of a retracement we got back, right? And that kind of pull down crash of 2022 commenced after we had such an incredible run from 20 all the way to the end of 22. Those were all coming off of squeezes. We also had a squeeze throughout early last year that fired in November, and this has propelled the market all the way from 4,250 to 5,700 essentially. Well, look at where we decided to pull down and how nasty this candle looks on the monthly chart. Number one, we're already very extended on the TTM squeeze. These squeezes generally don't last longer than a year. But we did get that through 2020. This lasted about a year and a half before pulling down officially. We are very far away from these moving averages on this time frame specifically. So something I'm trying to pay attention to more and more is there going to be more downside? Should I prepare myself for a 4,800 to 5,000? Also, statistically, if the market in April and July underperforms the rest of the year, we actually end the year lower. So coming out of the squeeze, now that we're finally calming down and we have the first monthly candle that looks kind of negative, I want to prepare myself for more downside. So I think from here, I'm going to pay attention to how we react to 54.25, right around this area. It's really solid support. We could totally go and retest all-time highs from here, but I think the more likely case is we will find our way back down to 5,000 on the S&P, but I also don't make predictions. That's not my goal. I just trade level to level price action. If we go to my flexible grid, my little arrow here for the moving average crossover, I like to use this a lot for a lot of my trades. It told me to take a short position, and I did listen to that. We were squeezing negative, right, on this chart, the 10-day, 30-minute. This is one of my other big indicators. If you see that squeeze build and it shoots negative, generally you spend the rest of that day going down, and that's what we continued to see here. So this will help you mitigate yourself and your emotions from maybe jumping into something that you didn't absolutely love, and you're like, I just need to have a trade on. You went long this morning because you thought the gap was going to fill, which this will at some point, but then you got eaten up all day because you completely disregarded the squeeze, or maybe you didn't know this was a thing you could pay attention to. So for me, this has been one of the best years of trading the markets for me. I'm up around $600,000 on the year from trades that I've placed, which has been absolutely phenomenal. This has been more than I could ask for, and it almost makes me want to not trade the rest of the year. I will here and there, but I will be scaling my risk back a lot and just continuing to focus on grading my setups more and more, right? Over and over. So that's one thing, and that's a lot of how I piece these trades together. I really haven't been using the expected move as much previously, but overall, I thought this was a really good setup, and I'm very glad that you guys are here to join me for this video. So thanks for all the love and support. That's going to be everything for me because I'm just so mentally zapped from like the mental taxation of having these trades on, going to be active, and then also trying to make YouTube videos as well alongside for fun and one of my hobbies and passions. So I really do appreciate all the support from you guys. Like I said, if you want to join the Discord or if you want any sort of mentorship services, you guys can find that down and send me an email. Just ask about it. You know, I look at the emails. So I appreciate all the work you guys do on your own trades, and I hope you guys have a very profitable week. And I will see you guys in the very next video.